Welcome to the Supply Chain Solutions Weekly Ship Show. Today is July 21st, 2022, and this is episode number 28 in our weekly educational series that keeps you informed of the changing market conditions as we strive to provide the handholding and the attention to detail that our clients value in a time of global supply chain disruption and inflation. As always, it's my pleasure to welcome back my Ship Show co-host, Jason Brand, our Director of Business Development, who joins me each week on our show. And finally, my name is Anthony D'Ambrosio. I'm the Vice President of Sales at Supply Chain Solutions, the company that always delivers value quickly, affordably, and flawlessly. And lastly, we'd like to thank our amazing Director of Marketing, Vanessa Fry, for producing today's show. So we have a great program this week, everyone, and I think it will give you a sneak peek as to what we can expect to happen with supply chains as we move into 2023 and beyond. So this week, we'll be talking about why supply chains are unlikely to stabilize until 2024. But before we do, let's just pause a moment and remember the people of Ukraine in their struggle for independence. Thank you, everyone. So rock guitarist Jack White, who extended his supply chain issues tour into June, might want to rename his band's next road trip after a different villain. That's because supply strains, while still afflicting many customers and consumers and businesses in the United States, are becoming even more mundane than menacing like they were 6 months ago, especially in the US. Serious disruptions have eased back from their pandemic peaks, and some are already adding less inflationary pressure. But the gradual end of the pandemic-driven supply crunch might give way to another potential headache, a slump in consumer demand that throws economic growth into reverse and leads to an ugly inventory pileup. Remember, just a couple of weeks ago, Jason and I talked about demand planning in our bullwhip recessionary ship show program that we did. But I think it's important to note that the pressures in global goods sectors, which have been central drivers of inflations as well as administration policies, are still accelerating things. The bad news, and this looks to be occurring on the back of a slowing in the global consumer's demand for goods, especially discretionary goods, may be a signal that the recession is already here. And I think we must be measured and cautioned against declaring an all clear on the supply chain front. And there are reasons to doubt whether clogs in the plumbing of global trade will be cleared anytime soon. Labor strikes, factory disruptions tied to COVID outbreaks in China, Russia's war in Ukraine, and a potential geopolitical confrontation in Taiwan could tangle logistic networks all over again. And economists generally agree that US household demand for merchandise will be key to watch in the coming months, but they're split about whether it's going to stay strong or start to soften. And the latest data that Jason and I had been looking at shows that consumer preferences shift away from goods in May and June, and looking ahead are forecasted to hold at the current levels throughout the third and fourth quarters of 2022. So to us, I think that would imply that the overall consumer preferences for goods over services will decline, but still remain slightly above summer 2020 and pre-pandemic levels, which is sort of a bit of good news. But that being said, more than half of supply chain executives don't expect a return to normal until the first half of 2024 or beyond, according to several new surveys that we recently studied and looked at. Meanwhile, 22% say that they expect disruptions to continue until the second half of 2023 as the world recovers from the massive impact of the COVID-19 pandemic. They also see a number of other factors preventing a return to supply chain stability, most notably the war in Ukraine, which came in at 30%, and labor concerns, which comes in at 24%. And again, it's important to note, in this environment, organizations will need to continue to be nimble and be especially attentive to inventory levels. And again, just remember, Jason and I did a show a couple of weeks ago about demand planning and how it's important to review your point of sale data and have your weekly or bi-weekly demand planning reviews to make sure that you are not holding too much inventory, because we all know that when you invest in inventory, it restricts your cash flow. So it's just something really important to keep in mind. But according to another survey and study that we looked at, that we just looked at a few days ago by the University of Pennsylvania, their dean of economics, 75% of the supply chain executives said that revenues at their company had been either negatively or very negatively impacted over the past year by supply chain issues. And ocean shipping by far was the leading broken transportation and logistics link at 68%. And the other main point was that the impact of the disruptions has been severe. I mean, 80% of the respondents saying their supply chain costs have risen between 22 and 60% between December 2020 and December 2022. So that's a big spread, and that's a lot. I mean, 20 to 60%, in supply chain costs rising, it's just astronomical. And I think looking forward, more than 2/3 of the supply chain executives said that they are very concerned that the U.S. economy is tilting into a recession as a result of rising interest rates, higher inflation, geopolitical uncertainty, higher energy costs, and a pullback in consumer confidence. We know we're already in a recession with 2 consecutive quarters of negative GDP growth. And now with inflation surging to 9.1%, and we saw that data come out last Friday from the Central Budgeting Office in Congress, that inflation is at an all-time high in the last 40 years of 9.1%. There are also major concerns about the US dollar destabilizing and losing its status as the world's reserve currency. So we really will need to watch all of this very closely in the coming months as the central bank systems continue to break down. Okay. And a lot of people think that the Federal Reserve is a US entity. It's a conglomerate of international banks. And the central banking system has failed 3 times. They go through this cycle in modern history: 1912, 1939, 2008, and we are in the beginning stages of a meltdown right now. So, while it's not pleasant news, it's something that we really need to talk about. So I think now's the time that we'd like to pose a couple questions for our listeners. I think just a few things to think about. So as a result of the challenges and lessons learned during the pandemic, Vanessa's going to bring up slide number 1 right now. What changes have been implemented to your company's supply chain and management practices? So, if we look at this first slide, we will see that, you could see here how it's trending at the end of 2022, 5.6%. There weren't a lot of changes. In the first half of 2023, people are expecting, everyone to make almost 14% of changes in their supply chain, whether it's near sourcing, resourcing, holding more inventory, hiring more talent. People are predicting that were surveyed that 27.1% believe that there's going to be a more normalized supply chain in the second half of 2023. So as you can see, not a lot of people think right now we're going to have any normalization at the end of 2022. But as we start to go into the first half of 2023 and we get into the second half, you can see that confidence is rising that the supply chain could normalize, but then people expect disruption again. And it's a bit of a bunch of peaks and valleys here as we look at the first half of 2024 and the second half and 2025 and beyond. And some people just are not believers. They think that there's never going to be a normalization in 2.8%. So, I mean, it's really interesting. I mean, my answer to that would be that the COVID-19 pandemic is has led organizations to really readjust their supply chain strategies. In addition to increasing inventory, companies have diversified their supplier base and explored alternate ports and increased their investments in technology. So that would sort of be my spin on question number one. I don't know if Jason has anything that he wants to add on that. That might be something off the cuff he might want to make a few comments on.
Honestly, not really. I think you kind of covered that one.
Thank you, Jay. So again, let's look at question number two. Over the next year, what do you view as the greatest threats to the return of a more reliable supply chain? Okay, so everybody should think about that and really do a little bit of inner reflecting as you all manage your company's supply chains and their manufacturing capabilities. You should really think about what are the greatest threats to make our supply chains return to normal. My perspective is the adjustments that we talked about above, like diversifying your supplier bases and exploring alternate ports and increasing your investments in technology will really help mitigate some of those effects of the pandemic. But new risk, including the continual conflict in Ukraine and the ongoing labor shortages, are going to continue to impact supply chain reliability. So it's a big factor. And then if we move to slide number 3, Vanessa, and we look at question number 3 that we prepared, when do you expect the U.S. can expect a more normalized supply chain? So in looking at the second slide here, you'll be able to see that, what changes have people made to their supply chain management, okay? 53.3% of the people have made a diversification in their suppliers. Instead of everyone sourcing out of China, people have went to countries to like India and Mexico and Bangladesh and Sri Lanka and Myanmar and Vietnam. So 53% on the diversification of their suppliers, more onshore and nearshore supplier production. If you remember, Jason and I did a show about that last year called nearshoring, reshoring, and bestshoring. And then again, investing in technology, 39%, using alternate ports at 37.9%, keeping more inventory, which is number 2 at 50%, adding more distribution points at 28%. And again, coming in at number 4, upgrading the talent on your team. So it's really a wide range of things that people are doing. My quick answer is when we can expect them to return to normal is I don't expect a return to normal for supply chains until the second half of 2023 or later, because in fact, the majority of my colleagues and peers that I work with and other subject matter experts really believe supply chain stability is unlikely until at least 2024. And we hate to be the bearer of bad news, but this is the new reality that we live in. And that's if there are no other sort of gray swan events, Taiwan, dollar meltdowns, things like that, And here's another last question I'd like to just throw out to everybody. If you had the power to pull just one magic lever to help get supply chain costs in the U.S. under control in 2022, what would you do? It's another great question to think about. I mean, my spin is that inflation and geopolitical uncertainty leads the list of concerns for supply chain executives. And I think many of the people that I spoke to that responded view lowering fuel costs, ending the war in Ukraine, and reining in the container ship cartel as the 3 events likely to have the greatest impact to have a more positive and normalized supply chain. But I think in closing, we're looking at least of 2 years of instability, and many economists and analysts declared that there will be a long and complicated road back to normal for the world's supply chains, with no simple single solution available to relieve the current stress on shipping. And unfortunately, as much as I hate to say this, there could be another 12 months or longer until things return to pre-pandemic levels of functionality. But overall, the conditions for international trade remain very tough, and the low cost and perceived low risk, both political and logistical, which helped to support development of global supply chains over the decades, have become sources of uncertainty in the current environment. And I think, however, these supply chains remain intact for now. It's more about rerouting, diversification of your suppliers or regions, more stockpiling, and inventory building. I mean, in the US, for example, warehouse utilization increased by 32% in June of this year compared to June of 2020, according to the data that we viewed from the Logistics Managers Index report that we review regularly here at Supply Chain Solutions. So importers should be considering options to mitigate supply chain risk and improve supply chain reliability. Remember, Jason and I talked just a couple of weeks ago about the bullwhip effect and about how the buffer stock was the grease or the oil to supply chains, and how that buffer stock was depleted during the pandemic. And then once we opened up, okay, and multi-sourcing and near sourcing. So this is a slow process. And I think right now it's a matter of planning further ahead than ever before. We now live in a world of supply chain disruption and uncertainty, and this is the new normal. The best thing you can do is to have a partner like Supply Chain Solutions to help you navigate these uncertain times. Supply Chain Solutions has invested heavily. We are the premier company in cutting edge real-time transportation visibility platform technology. And that technology is going to be a great tool that our clients and our potential clients will be able to take advantage of as we roll out our new platform. So we really appreciate everyone tuning in. I do want to apologize to Jason that I didn't let him have a chance to say anything this week.
No, that's totally
fine. But I know he's going to have a bunch of stuff to say right now, and hopefully there's a couple of questions. That will turn it back over to Jason and Vanessa.
Anthony, I think that was really fantastic. And, it's really interesting because I think right now, more than ever, you need to be more involved with your supplier's supply chain as well. And that's also an area where having a good partner can help because, for example, there's obviously a lot of instability in the ocean rates. We obviously saw a lot of instability just even in the domestic rates. And, fuel is another kind of monkey wrench that was in here. Also driver availability, just a lot of kinks in the chain that we've just been working through one after the other. And so, getting your goods closer was a benefit. But the problem is you're not working close with your supplier. And if you're switching as far as where your supplies are coming from, but your raw material is still coming from the other side of the globe, or maybe it's on a lane where it isn't that much volume, you could still be in an issue. We've got a customer who we work with who builds airbags, and a lot of their raw material still comes from India. They've got manufacturing all over the world, but it doesn't matter where it's coming from. Those factories couldn't get the raw material in the volumes they needed from India. But the benefit is they're on a different vessel. So if you really dive into what they're doing, where they're getting the material from, you might be able to pull some levers you don't realize exist. And that's kind of where partners such as us or other 3PLs are able to kind of get involved and walk you through the process in kind of a hand-holding way of, hey, what questions are we thinking about to get your goods to you at a lowest possible cost, given your constraints. Do you think that makes sense, Anthony?
Absolutely. I mean, that was an excellent analogy, Jason. I think it's spot on. Spot on.
Awesome. Hey, thank you.
Okay. Thank you so much for your time. I have 2 questions in the queue. Let me get them going. Number 1, Mary asks, why are they rationing shipping space on LTL from Taiwan? Is this a move to make more handling / shipping charges?
Jay, please have at it.
Oh, you got that one. I don't know much about this right now.
Okay. Sorry, Jay.
Yeah, no, go for it. Go for it.
First crack at that. So, this has a lot to do, and I hate to refer to these guys as this, but this container shipping cartel. Okay. There is a lot of noise about some of the changes in the Ocean Shipping Reform Act and some of the enforcement that the Federal Maritime Commission wants to start rolling out as we move into 2023 to rein in the unfair detention and demurrage practices that many of the marine terminal operators and container ship companies have been just, ripping off importers and exporters and manufacturers for many years now. I hate to say it that way, but I think it is a situation where they want to manipulate the space and the capacity because rates are dropping right now. Okay. I mean, we're seeing pricing coming out of China and the Asia Pacific Rim. Some of that pricing is under $8,000 or $9,000 per 40-foot container or 40-foot high cube, depending on, where your freight is originating. I mean, we were just able to offer some pricing to a client for shipments coming out of Yantian into Savannah, and our rate was about $5,900, give or take a few dollars. I can't remember the exact specific rate. I think it was $59.32. So pricing is falling, but we're going to see a lot of this manipulation in the space and the capacity. They're going to make a lot of excuses about the lack of equipment. So I think this has a lot to do with why it's been so hard, especially coming out of Taiwan and a lot of places out of the Asia Pacific Rim. I'm not sure that answers your question, but I hope it does.
Thank you. Thank you very much. Question number 2. This is a long one. Oh, we had a show on this a couple weeks ago. I will send you the link, Gabriel, but here you go, Anthony. I know you're Brazilian, so I know I said that right. What do you think? What do you think about the OSRA 2022? It will really improve the ocean. Will it improve the ocean logistics? I ask because, in my opinion, this can backfire and make things worse in the logistics situation in the U.S. The speech of justice and equity with the meddling of the government doesn't sound good for me. I don't know much about legislation in the U.S. So just, wanted a quick, your opinion pretty much. Great hug from Brazil, he says.
Real quick.
That's so great. Jason, go ahead, please.
Just real quick. The thing, Anthony, is this is right in your wheelhouse. I mean, you don't understand, right? When I first started talking to Anthony regularly, Anthony was talking about some components of this right off the get-go, laid a bunch of facts down on me. He was watching it pretty intensely, but yeah, I see what you're saying. And I kind of see how you're like, okay, is this an opportunity for government to have kind of a hand in something that, they aren't really going to help. They might just mess it up. And I don't know at this point. I mean, it's just was signed into law. I know this was a bill that had already gone through some iterations, but still June 16th, 2022. So Anthony, what do you go into detail about it? What are you thinking about it?
So thanks, Jay. So, I mean, as Jason just mentioned, President Biden, and, we have a saying in Italian, if you walk the edge of the knife and you slip, either way, you can get cut. And this is one of those same situations. As Jason mentioned, President Biden on June 16 signed into legislation, into law, the Ocean Shipping Reform Act of 2022. And that was really the first significant change and the largest overhaul of the shipping regulations since 1998. And basically that legislation that was signed into law broadens the regulatory powers of the Federal Maritime Commission with the goal of promoting U.S. exports while reining in the ocean carrier market power that has strengthened over the last 25 years. And I can tell you, folks, I've been in this business for 38 years, and I remember back when I broke into the business in 1987, and Jason and Vanessa weren't even born then, chuckle. I remember, a 40-foot container from Hong Kong to LA being, $500, so I think really they have strengthened those ocean carriers. And in a nutshell, I think the OSRA revises the requirements governing ocean shipping to increase the authority of the Federal Maritime Commission to promote the growth and development of the U.S. exports through the ocean transportation system that is really, competitive and efficient and economical. And I think that, the bill really had a couple of components. They were going to investigate the complaints about detention and demurrage charges and late fees by the, charged by the common carriers. They were going to determine whether those charges are reasonable. And they also thought that they could determine or put a mechanism in place to order refunds on reasonable charges. So there's a lot of factors of that we unpack. But I will say this, when you think about it, I am skeptical myself to see how this is going to develop, because, if we look at one of the rulemakings about unfair discriminatory methods in the rulemaking, okay, they stated that the FMC shall initiate a rulemaking defining unfair or unjustly discriminatory methods used by carriers against their customers. But they said that they have a whole year to enact it. Okay, so some of these things that they enacted here, they have up to 2 to 3 years. I mean, here you go. They want to implement a shipping exchange registry that sets the standards for registered national shipping exchanges, sort of like a digital over-the-counter platform connecting shippers and carriers for the purpose of entering into underlying transportation contracts and things of that nature. They have 3 years to enact that. So I think it could affect commerce with other countries, namely Brazil. It does, rear, the United States ugly head here in terms of protectionist policies, trying to protect the U.S. market. So I don't know if I'm actually answering your question. I know it's a long answer and I want to apologize, but I think it's something that we're really going to watch closely. And I will let you know that our executive vice president of international solutions, Dennis Rolls, is very close friends with one of the FMC commissioners who I had the privilege of meeting about 4 years ago, Commissioner Rebecca Dye. And we are working on getting her as a guest on the ship show, hopefully within the next month. She's extremely busy, and we'd like to try to have like a call to action and have as many people as we can on the ship show, so we could all interact in an open forum with Commissioner Dye. So stay tuned for that. And with that, we'll send it back to the amazing Vanessa Fry to see if we have any more questions.
We look good and perfect timing. So that's amazing. Thank you so much for your time, Anthony, Jason, everyone watching. You will get that follow-up email shortly with the recording, and stay tuned for next week.
Take care, guys. Got big changes coming in the ship show in the coming weeks. It's going to be hot.
Get excited. Hey, see you, everybody.
Bye.
Take care. Make it a great day.